Hello and welcome to CATEX-TV. I'm Tom Bale in London. It's 4:30 p.m. in London, 11:30 Eastern Time and 12:30 in Bermuda. Today in history. Today in 1955, Hurricane Diane killed 200 people and became the first billion-dollar storm in the northeast of the US. And today in 1980, a Saudi Arabian Lockheed TriStar crashed on landing at Riyadh, killing 103 people on board. And today in 1991, a coup in Russia deposed President Mikhail Gorbachev. Now to the news. There's an enormous amount of storm activity going on at the moment. In the Atlantic, Hurricane Bill is now a Category 2 hurricane with sustained wind strengths of 91 knots. In the Eastern Pacific, Storm Guillermo has passed to the north of Hawaii and is heading into the deep Pacific. The Western Pacific has got Typhoon Vamco with a building speed of 65 knots, and Depression Maka is still got a very erratic course, but it's expected to settle down in the next week or two, and we'll keep you posted on all those storms as they develop and any others that materialize this hurricane season. The residents of Bermuda are being urged to start preparing for Hurricane Bill today. They're being advised to have everything in place by Friday morning. The Emergency Measures Organisation, the EMO, yesterday convened a formal meeting to get an update on the storm's progress. Resulting from the information provided in the briefing, the EMO is advising public to begin to prepare for the impending storm today because Hurricane Bill is considered a potential threat to Bermuda. Yesterday's meeting was co-chaired by Dr. Derek Binns, Permanent Secretary of the Ministry of Labour, Home Affairs and Housing, and Police Commissioner George Jackson. Dr. Binns said, based on our briefing today, the MO is taking the storm very seriously. Residents should as well. We have learned from experience that hurricanes can cause tremendous destruction. We have a level of certainty that Bill will come quite close to the island, therefore by Friday morning, and we are urging members of the public to have their preparations complete. Bermuda Weather Service Director Dr. Mark Guichard advised the group that as of 4 p.m. yesterday, the storm's closest point of approach is expected to be on Saturday, roughly between 9 and 10 a.m., when the storm will pass some 150 nautical miles west of Bermuda. Currently, Hurricane Bill is a strong Category 2 hurricane with sustained winds, as we said, of 90 knots, 91 knots, and gusts of up to 110 knots. Several US states prone to natural disasters are measuring the odds on a mega bet. Concerned observers say those calculations are based on lady luck and rolling the dice. Public insurance programs in some coastal states are flirting with the notion of saving millions of dollars every year by shrinking or cancelling the coverage they buy from private reinsurers. The states are in effect the insurers themselves in this case. They are either tired of paying piles of cash for reinsurance policies that are rarely needed, or too broke financially to maintain coverage that has saved state residents from paying billions in hurricane damage claims. In the parlance of the insurance industry, without cover or a hedge against their expensive risks, they are running naked. Now here's the bet. Save hundreds of millions with no disaster, or perhaps pay billions with a disaster. John Golemsky, president of Massachusetts Public Insurance Program, said of discontinuing the state's reinsurance policy, it's actively discussed every year. The price this year was $80 million. In return, the reinsurer promises to pay $900 million in claims if a storm sweeps ashore. Golemsky makes sure that those decisions are made by money-counting legislatures and are accompanied by a weather warning. He said, "We don't know when it's going to hit." Other states are more muscular in their movement away from reinsurance. Texas let its policy die at the end of May, less than a year after reinsurers paid $1.5 billion in claims related to Hurricane Ike. Texas will buck this hurricane season with no reinsurance. California is also looking to reduce its coverage. The state's public earthquake insurance program has paid $2.3 billion total for reinsurance since 1997, almost half of its total revenue. In return, it has collected $250,000 on claims. California wants to save its money and pay the claims on its own. Glenn Pomeroy, president of the California Earthquake Authority, explained 40% of all that California policyholders have paid in for their earthquake coverage, we've paid out of the door by way of reinsurance premium. It's time to reduce our heavy reliance on reinsurance. Now, it's a challenging time for state insurance programs. They're designed to be a safety valve, providing last-gasp coverage to residents who cannot find or afford private catastrophe reinsurance or insurance. But punishing hurricane seasons in 2004 and 2005 helped redefine these programs. Private insurers gasped at the rising number of storms and destruction inflicted on the United States beginning in the mid-1990s. Scientists, meanwhile, began warning of stronger hurricanes spurred by rising temperatures related to greenhouse gases. Insurers reduced their exposures by vanishing from risky coastlines and raising rates. Policyholders crowded into the public programs, elevating the state's financial risks. In return, reinsurers responded to the rising risk of loss by charging the states more. At the end of this June, premiums were up 15% from a year ago, according to brokers Guy Carpenter & Company. That is vexing state insurance programs, and some of them hope the federal government will replace private reinsurers. 4 states, California, Florida, Louisiana and Texas, are pushing Congress to pass a bill that would make the federal government a co-signer for states that borrow money to pay damage claims after natural catastrophes. That would mean the states could replace reinsurance with debt. The savings might be big. Millions normally paid for reinsurance could be stashed away into reserve accounts used later to pay claims and service loans. It could also backfire. One major storm could strap a state with a debt for decades. Policyholders would have to pay it back through fees on all sorts of insurance policies, from auto coverage to inland property insurance. The European Union consumer safety watchdogs have launched an investigation into reports that Apple iPods and iPhones are exploding in the summer sunshine. Officials have acted after a series of cases in Britain, France, Holland and Sweden, in which Apple's digital music players and mobile phones have allegedly spontaneously combusted or exploded. In the latest incident, Romain Collega, a French teenager, was injured when his girlfriend's iPhone was said to have exploded into shards after beginning to crackle and pop like a deep fryer. That report followed a British case earlier this month involving an iPod Touch music player belonging to Elise Strambra, an 11-year-old Liverpool girl. In July, a Dutchman named only as Peter C. claimed that he had left his iPhone in his car for 15 minutes, only returned to find that it had caught fire and severely damaged the passenger seat of his vehicle. An iPod has also been implicated in the Swedish fire this June, when a stationary Saab was completely engulfed in flames, almost incinerating the owner's dog. A European Commission official said, "We've asked Apple to share with us any information they might have because of press reports of problems relating to iPods and iPhones." The Commission has sent out an alert on its RAPEX product safety system, requesting the EU's 27 member states for any details of further incidents involving iPods or iPhones. Apple claims it has ruled out any widespread safety problems with the 200 million iPods and 26 million iPhones sold in Europe, but is carrying out a full investigation into the reported cases. The Commission official said Apple have come back to us and said that these are isolated incidents. They don't consider that there is a general problem. An Apple spokesman said, "We are aware of these reports and we are waiting to receive the units from the customers. We have the full details. We don't have anything further to add." Broker Towers Perrin has enhanced its presence in the US property reinsurance market with the appointment of Derek Keating as executive director with the London reinsurance brokerage business. He leaves behind Aon Benfield, where he's worked for 14 years, to join Towers Perrin. Most recently, Keating served as a member of Aon Benfield's North American Reinsurance Management Board, prior to which he was an associate partner with Ellinger Heath Weston, which was acquired by Benfield in 1995. Keating will assume his position on the 1st of September and report directly to Keith Harrison, the Managing Director of London's North American Reinsurance Division. Chief Operating Officer of Europe, Ross Howard, has welcomed Keating's appointment and praised his wealth of experience and business acumen. American International Group, AIG, CEO Robert Ben Moshe will get a $7 million annual